One of the trouble spots for banks continues to be power-stressed assets. It has been said time and time again that while stress in the steel sector has been recognized, stress in the power sector has not been recognized. Now, first, there were efforts being led by the Power Ministry to come up with some sort of a plan to resolve these assets collectively. That plan has not worked, so now there is a Plan B being led by banks. What is that Plan B? Vishwanath Nair is here with the details. Vishwanath.
Right, yeah. So this Plan B actually, it bases itself, and the linchpin of this entire plan is an asset management company that the lenders are planning to float. Of course, this is all in the proposal stage, and SBI is leading the charge from the bankers' side. This AMC, or this asset management company, is essentially going to hold the debt and the equity of all of these stressed power accounts that exist on bank books. So banks will transfer all of this to the AMC. But what exactly is the AMC? To understand that, let's move to the next slide, which points out that the AMC will be floated by banks in association with some alternate investment funds, pension funds, as well as the NIIF, which was set up by the government, the National Infrastructure Fund. That also is going to participate in this, or at least that is being talked about. There's a lot of paperwork that is still pending. SBI will do all of that in the coming months if everything works in their way. What exactly is the AMC going to do essentially is that it will buy all of this equity from the banks that they may hold in some of these power sector accounts. Remember that a lot of these were under SDR, so there will be a portion of the equity of the company that is already with the banks available with them. So that is going to move to the AMC. In the remaining debt, the banks are going to split it into sustainable and unsustainable parts, and this unsustainable part will then be converted again into equity, which will move again to the AMC. Now, if this is not enough, the AMC will appoint public sector power companies like your PFC, RECs, and NTPCs of the world, which will act as operational agents. They will work on a fee, and they will just run the company, ensure that the basic operations are running. It's important to note that the AMC, while doing all of this, while managing these companies for a period of about 5 years, they will also be looking at buyers, actively searching for buyers who will come in and buy these assets off the AMC, and that money will be used to repay the banks. At least that is the basic structure that is coming up. In case of the promoters, though, that is an important bit here. The promoters of these stressed assets are also being taken to task by State Bank of India. Essentially, they're saying that whatever equity you hold, a large portion of that will be sold to the AMC at a significant haircut, to a point where promoter equity falls below 25%, and they can't really meddle with the way the companies run or try and influence it in any fashion. Once they have found these buyers, of course, a lot of these banks are going to get repaid. A lot of the debt is going to come back, or that is the expectation. What does SBI still have to do? Well, it has to get all of these stakeholders on board. It has to sign binding agreements with all of them. It also has to get state governments to agree that the distribution companies in each state is not going to cancel the power purchase agreement just because the ownership of these stressed power assets has moved from promoters to the AMC, because it's important. If that gets cancelled, then there is nothing that the company can do to sell the power and earn money. Apart from all of this, it has to get the RBI to agree to all of this, which is going to be a big task, because the RBI has very clearly said it is not going to go back on its Feb 12 circular. And unless that happens, unless the RBI gives some kind of a leeway, then this plan makes no sense, because otherwise, after the 180-day period of the Feb 12 circular, these accounts will go into NCLT. Bankers are worried there are no buyers in the market, so NCLT accounts will lead to large haircuts, and then you can't do anything about these power sector loans. About 1.8 lakh crore, so it's a large amount of loans, and they're worried that that hit is going to come to them in the next couple of quarters.
Okay, pop quiz, Vishwanath. What does this plan remind you of?
Well, a bunch of other things, right? They came up last year with something where they tried to sell it to NTPC. That didn't work out because NTPC wasn't interested. They tried to revive it again, but NTPC again said, we're not interested, so they completely abandoned the plan. They again tried to, this also reminds you of what happened with Dabhol power plant. Similarly, brought in NTPC and GAIL to run the operations, try and stabilize the whole thing, but there was no cash, so there was no way that the power plant could run, and there was no way that it could make money. Banks, again, IDBI, ICICI, SBI, everybody wrote to the ministry, tried to get the government to act. Nothing happened. This was the last government, of course, but nothing happened there.
So, also 2016, when this whole stressed asset problem started, they wanted to do a stressed asset fund, which the RBI said
ICICI was trying to come up with some form of structure. They worked on it for months. the RBI never approved it. So, you know, getting the regulator on board is going to be the big challenge here. The government is meeting them today. That's what we get to know from some of these government officials who have spoken to us on off record. But you know, unless the RBI agrees to all of this, or at least agrees to consider some kind of a leeway for banks, there's no way out.